Just a few days ago, we had Tesla earnings, and that is always the big day, 4 times a year, where we hear all about Tesla, its performance, its earnings, but also the outlook for the next quarter and beyond the next quarter. And I covered that. I told you my outlook. Came out on Thursday last week, my video on this. I recommend you watching it so you see how I see the earnings and what it all means. The takeaway is the earnings were incredibly bullish for 2026 and revealed all the catalysts and revealed the insane and unbelievable roadmap we are watching for autonomy, robotaxi scaling, cybercab being scaled, the steering wheel-less Tesla coming end of next year, which is crazy when you think about it, at scale produced, which means they're absolutely confident they're going to solve autonomy completely in the second half of next year. And then, of course, Optimus, the humanoid robot coming out in Q1 2026, and so on and so on. But I also said that for the remainder of this year, I see Tesla stock going sideways because the catalysts are all gone. They're all pushed into Q1. Optimus launch, the robotaxi catalyst, the removal of the safety drive that I predicted for November, and Elon now confirmed, by the way, that it happens end of the year in some areas in Austin, but that removes the catalyst because now everyone knows it. There is no surprise anymore. There is no catalyzing effect. So Optimus potential demo is gone from November 6th. So what's going to happen November 6th? Not much, in my opinion. Pay package will be approved. We have a different video on this, by the way, this week. But okay, fine. Everyone knows that. Optimus is not going to be shown. Maybe there's some Roadster demonstration. That's the only 10% catalyst. I had Peggy on and we discussed this a little bit. The only possible crazy catalyst that I see, unlikely but possible, is that the Roadster is a flying car, a VTOL, and it's being revealed, and suddenly there's another $1 trillion market opportunity or multi-trillion dollar market opportunity. I'm not sure that Tesla is going there. I think I would if I would be Tesla because I think it's obvious to do it. But it also would be a little crazy. So I put a 10% chance on that they reveal the Roadster and boom, turns out they're unlocking the entire VTOL market. I think it's a 10% chance. There's a 90% chance it's not that. And if Tesla Roadster is just a supercar, no one cares, right? It has no impact on the stock. So I don't see any catalyst coming, and I think it's going to go sideways for the next 2 months until end of the year, and then we go from there. We have to recess. So in this video, we have to discuss what it means. For long-term investors, not much because you just hold it. But for anyone who wants to generate alpha on top of the long-term Tesla holding, okay, what do I do? My job is to generate alpha on Tesla and some other things. But I want to get all the upside of these disruptive AGI stocks, but I want more than the upside. I want to be a little greedy and I want to understand, okay, what can we do to enhance our returns? So here you have the situation. This is when a stock goes sideways, and we have seen this in Tesla. Roughly, in my mind, that's how I view Tesla from a tactics perspective, right? Not long-term holding perspective. That's easy. You just buy it and hold it. If you want to enhance your returns, you need to be a little tactical. There are 4 states of Tesla stock. Tesla stock can be bullish. We have been bullish since April. Hey, creating these videos is a lot of work. Please like and subscribe. It really helps out the channel. Now let's get back to the video. So in April, when we hit these bottoms, which were obvious bottoms, and I covered this extensively, that the tariff fake news situation is stupid, there's a V-shaped recovery, that was a bullish phase. It was very clear that Tesla goes up from 220 very high up into 400 plus. It was a complete no-brainer. So this is a bullish phase where you want to add to your exposure, right? Then you have explosive phases that are not easy to spot, where Tesla goes up 200, 300%. Over a few months. That's, of course, the big prize. You want to catch the stock in the right moment and want to be in the stock when that happens, like in 2020. In my opinion, nearly guaranteed by 2027. Could be next year, could be 2027, could be a mix. So we have these totally explosive to-the-moon rocket situations. And C, it's about pattern recognition, right? Where are we at with Tesla stock? So bullish, not anymore. We had bullish from April to now. Explosion, I do not think so. Not right now. At some point in 2026, high probability, if not extremely high probability in 2027. Okay. Then we have bearish, fall. That was pretty clear to me in December of last year, after we had this insane run up and the Fed announced this December 17th, very dark day. And Powell said the stuff that he was negative. I told everyone, ooh, it's going to be rocky. Not rocket, but rocky. the opposite of a rocket. Not the opposite, but okay, we are going down. And that will happen also in between, right? If you get exuberant, then you have to prepare for bearish, which is the most tricky for a bull, right? What do you do if you're a long-term holder, you're bullish, but the stock is going to go down for the next months? It's very tricky. That's my weak spot. And then we have D, sideways, which happens a lot. So sideways means, oh, we went up, but now no catalyst. What are we going to do? Are we going to fall? Unlikely, because we have these super big carrots coming, but there's also nothing happening. So it's probably going to go sideways. That's what we are discussing today. What do we actually do? So we can take a quick look at Tesla. So here we are. That's the situation. As I predicted, by the way, after earnings, right? You had this crazy thing on Wednesday. After earnings, it started very low and then ran all the way back up, and then it fell, right, on Friday. When you look at the 6 months, right, you see this big run up that started September 9th. And now we're up here, and you see we're going sideways, right? And you can identify this channel, 460 on the upper end, and then down here 413, let's say 410 to make it simple. So I'm seeing no catalyst coming here. Maybe a little bit of a magnet for November 6th, but the magnet is now much weaker. So until December 31st, let's say for now, where is this going to go? I don't know. It's going to go sideways, and we are probably dealing with this channel of 460 to 410. And what do we do now? Do we just sit here and not make money and just wait? Not my cup of tea. So let's skip all the way down here and discuss what we do. What does sideways mean before we go into the tactics, some options tricks, right? I reveal today, so you can. And please don't just copy me. I will have more disclaimers. This is all dangerous stuff. I'm just telling you what I do. So first of all, what does sideways mean? Sideways means there is no alpha catalyst for Tesla. So Tesla is going to go sideways, but that effectively means, and by the way, when I say these things, it's all probabilistic. Who the hell knows what's going to happen? But my best bet right now, the most likely outcome is sideways. But sideways means Tesla moves with the market with its beta, and beta is 2. And beta means when the S&P or when the NASDAQ goes up 10%, Tesla goes up 20% for no good reason. It just does that. And when the market goes down 10%, Tesla goes down 20% for no good reason. That means sideways. So we need to keep watching the market. We need to keep watching next week, for example, the Fed. So anytime the market does something, Tesla will just also do that, but times 2. Because unmotivated Tesla is just hanging out for the next 2.5 months, right? That's what sideways means. So remember, macro and markets are very important. Strategy switch, how do we do that? When it bottomed in April, what I did is my favorite trick. You have full stock position, for example, in a stock, then stock drops like crazy. You cannot buy more stocks because you don't have money, because you're fully invested in the stock. What I do in these instances is I took a lot of 50% of my entire stock position, 50%, that's a bold move, and roll it all into leaps. Long-term call options, long-term. Right, 2027 and end of 2026, September 2026. And what does it do? It basically allows you to leverage up. And that paid off very nicely. I'm up 180 to 220% on the leaps. Like, let that sink in. That's a lot of money. So that was very good. Got me very good alpha returns. On the best leaps, by the way. I had some leaps that are not that strong. So I'm not up to 100% on 50% of my old stock position. That would be crazy, but I'm up very significantly. I have roughly 30% alpha over Tesla this year so far. So that was very good. But now that doesn't work anymore. I am concerned, and leaps also, they are now getting into the churn rate and lose a lot of their implied volatility. And I saw that even before earnings, right? They were dropping a lot in their premiums. So now is not the time, in my opinion, to hold too many leaps. I still have a bunch. And I rolled them back into stocks, but also in cash. Okay. Why cash? Because if you do short options, cash is king because it gives you more margin than holding stocks. So you can actually do more if you have more cash. Okay, let's discuss this. We have a channel. My thesis, it's always important. I'm not an options trader in the classical sense. Options for me are just instruments to execute on a directional conviction. So this is not options trading in the conventional sense. I first have a conviction. I develop a conviction. Sometimes I don't have a conviction, then I don't do anything. Also important. But if I have a conviction, and my conviction right now is we have probably a channel where Tesla stock will move from 410 to 460, back and forth. because it doesn't know what to do. Can change any second what I'm saying, but for now, that's my best conviction. And every week where I don't change it, I can make money now. Okay, what do? I sell puts at 4 or 5 strike price weekly because you churn through them. They go to zero all the time, which is what you want. You want to sell the puts, collect the premium, see it go to zero and keep it. And you sell calls at 465. Now, do you always do both? Of course not. If you are at 420, you're not going to sell calls. That's stupid. You're going to sell puts. You have to do counter intuition. If you are convinced that your channel is intact, you want to sell the bottom, the puts, when the thing drops, because you get much more money, right? If this is for 420, you sell a 465 put call, you get like $1 or something useless. But here you get like $10 or something, or maybe 8. So, you need to be counterintuitive and say, well, I'm selling the calls when we go to the upper end because I'm getting so much money for the calls. And when we drop, I'm selling puts, and I get all the money for the puts because I have the conviction, if you have the conviction, that the channel is stable. So let's take a look at this to put some numbers on it. Here we have this beautiful options chain. This is all not important stuff. Go to options chain. We are at 433, right? You want weekly, right? Let me just explain this whole thing. October 31st, that's weekly. So end of this week. And all you need to survive, it's a game of survival. You want to survive 5 days, 5 trading days. And if you were right and this thing behaves, you keep the money. So let me explain in case you're new to this whole thing. Boom, boom, boom. Here you have the puts on the right side and the calls on the left side. And if you go to 4 or 5 right now, you're getting $2.45, right? And this is pretty, we are at 430. So if you want to take more risks, of course, you can go closer to the money, but you have to be very cautious. It's not very healthy. Let's do maybe 410. It's just, no, let's stick to the safe solution. So 245, right? So that means if you sell one contract, it's always 100 stocks per contract. So you sell one of these put options, you're getting $245. Okay, $45. If you sell 5, let's say to make the math simple, you sell 5, you get roughly $1,000, right? A little bit over 1,000, 1.2K, $1,200. Okay, what does it exactly mean? Remember this, right? So if you sell 5 of these contracts, you're getting $1,200 into your account, or I get into my account. Okay, for perspective, let's go back. Here's the math. Let's assume for now you have $100,000 in cash or in Tesla. I will go into each. It doesn't matter in this case. You have either $100,000 in cash, which would be stupid, or $100,000 in Tesla stock, right? Let's say this is your entire account. All you own is $100,000 and you have it all in Tesla. Let's just keep it simple. What I just explained to you is that if you would sell 5 of these contracts at 405, right, you're basically making a bet. You're making the bet that Tesla stock will not fall below 405, $105 by Friday, right? And if you're bull, you say, oh, no, of course it's not going to fall. It's 433. It already fell. It's never going to fall to 405. But of course, it could totally do that and destroy you. But let's say that's your bet. It's a very, limited bet. And you're betting these contracts on it. By the way, 5 contracts means 500 shares. You're basically 500 shares of Tesla kind of long, which is a lot if you have 100,000, right? That's not 500 shares. So you have way more shares than you have in these put contracts, but you're selling the puts, keeping the 1,200. And if you're right, all you need is be right and do not fall below 405. Once you fall below 405, you know the game. Then you owe the difference to 405. So if it drops to 305, which would be not good for anyone, you would owe a lot of money, right? You would owe a lot of money. You would owe like $100 per contract. So 10,000, you would owe $50,000. So you are in the red $50,000, which is 50% of your entire portfolio. That's the risk of short puts. But for that, Tesla stock has to be this Friday at $305, which is not very likely. Okay, so you need this margin here. What that means is you, of course, your broker is not going to allow you to sell unlimited amounts of these puts, right? Because technically you don't need money for it because you're getting money. You're selling and you're getting the 1,200. But of course, you're not allowed to sell 1 million of these puts because your broker is not stupid. They're going to say, well, you only have 100,000. I reserve some money. And it depends on all kinds of things. But let's say for simple math reasons, estimate you can estimate roughly 5,000, maybe 7,000 per contract that they will kind of lock in. If you have $100,000 in Tesla, you basically have $50,000 roughly available for margin because it's stocks. They reserve, they take away already 50,000. They don't count. You have stocks. If you have 100,000 in cash, you have 100,000 margin capacity. With 100,000 Tesla, you have roughly half of it. They give you half of it. So 5,000 per contract. If you sell 5, you're at 25,000 that will be blocked. So technically, you could even sell 10, but don't overstretch your risk, right? Because 10, you make more money, but you're also taking more risk because then if something goes wrong, you're much more cooked. Now, think about it. Now we get to the math. If you do this, it's a very limited risk bet, but be cautious. If it goes wrong, it really goes wrong. If you bet on 4 or 5 that Tesla will stay, if Tesla goes to 450, 440, 460, 420, 415, 410, you don't care. It's all the same outcome. It's above 405. That's all you need. That's why the strategy is so interesting. And because you're very disciplined, you're only selling 5, even though you could sell 10 or maybe even 20, depending on your margin. But let's assume you are disciplined. You keep it way out of the money at 4 or 5. You don't become greedy. Let me go back to explain what greedy means. It's very important to understand greed. So 4 or 5, right? Once you're in this game and you're selling it and you're making your $2.50 or 45, so you're 245 per contract, you're 1,200 for 5 contracts. Of course, if you're greedy, you are going to say, wait, Joe, this is ridiculous. Like, this is so safe. Tesla is still so bullish, all the optimist stuff, everything amazing coming. Why don't I sell 415? I'm totally sure that Tesla is not going to fall below 415. Then I would make twice as much. Same thing. If Tesla goes to 420 or 430 or 440 or anything above 415, I'm making $4.35. And you, Joe, you want to push me all the way down here like a conservative, and then I make only half of the same thing. 5 contracts here would get me twice. So if you go instead of 5 contracts here to 10 contracts here, then you would make 4,350 just next week. And that is what's called greed. Because then you have overexposure, you're too close to the money, then this stock drops to 400 and you're totally screwed, right? You're totally screwed. Because then you actually lost $15,000. So you have to be cautious, be disciplined, be safe. So now let's get back here and I explain to you what the hell is going on. If I do this and I have 100,000 total portfolio value, right? I normalize it for 100,000. If you have 10,000 divided by 10, if you have a million times 10, but if I succeed with this little trade, I make 1.2% added alpha to my portfolio. And guess what? If you annualize it over the year, of course, at 1.2, it's actually more. It's like way more. It's like 60% or something. You add 60% return if you would do this every week. 1% per week, a pretty safe additional return, adds up dramatically. You're basically the best manager on Wall Street if you would pull that off. If you pull this trade off every week with no fault, which by the way is totally impossible, but if you would add 60% total return. You would have $160,000 even if Tesla does nothing the whole year. So that's why you have to put greed into context, right? So you don't need to be that greedy. If you make 1.2% per week in a safe trade, this is gold. And even if you would do it only 33% of all weeks in the year, you make 17%, right? Be happy with 1%. That's my golden rule. Be happy because you need to control your greed. Otherwise, you say, why would I do that if I could make 4 times more? It's like, well, because you don't need 4 times more. If you want 4 times more, it's going to end very badly. But 1%, you are a total winner. If you make 1% of your entire portfolio in additional alpha with short selling of puts or calls, and you're consistent with that, and you're disciplined, and you always make 1%, you're the biggest winner ever. So here's quick alpha math, and then we wrap it up. Just want to share some numbers here. Think about it. If you are in a year and Tesla is up 10%, which it is, by the way, this year Tesla is up exactly, let me see, year to date, oh, it's actually up 14%. Really? Interesting. So year to date, Tesla is up 14%. Is that true? I thought it's more 10 or interesting. So the stock is up 14%. And with our strategy here, you would, with a leap roll, you're roughly adding 20% to this, right? By April leap roll, that boosted the whole thing a lot for me. And then the alpha churn, let's assume you do this 1/3 of all weeks. your total return ends up being 47% instead of 10%. This is just an example here. So this is one alpha strategy. If it drops too much, roll into leaps. You have to do your own thing. It's all very dangerous, but you know what I mean. And alpha churn, when it goes sideways, can add you another 17%. So you're ending up with 47% up your entire portfolio when your underlying position is only up 10%. And you get an alpha of 37 percentage points, which is insane. Or in percentage, you get 370% above the underlying, right? You get 47%, but the people who only have Tesla and did nothing have 10%. That is the art of alpha. Of course, this is all very dangerous. If you make one mistake, everything is messed up. So you need constant, complete discipline. You have to control your greed. Greed is good because it motivates you to do something, but greed is also very bad because then it gets out of hand. You're putting up the strike price too close to where it is. You're putting too many contracts in. Bad. That's why the 1% per week rule, very smart. So I hope that wasn't too complicated, but you can rewatch the video and stop and look at the option chains and everything. I hope that was helpful. Stay vigilant if you do these things, and I hope to see you very soon.